Bloomberg Audio Studios. Podcasts, radio, news.
This is Everybody's Business from Bloomberg Business Week. I'm Stacey Vanek Smith.
I'm Max Chafkin.
And this week, Max, I would argue that the theme of the week is, should I stay or should I go?
Yeah, you got President Trump pondering whether Jerome Powell should stay or go. We also have people potentially going just because it's travel season.
Yes, exactly. And maybe not going because the economy's feeling a little iffy right now. And also our underrated story, should I stay or should I go, astral travel edition. That will make sense later. So, Max, we got inflation numbers out this week. These are the numbers everyone's been watching, especially since tariffs have been in place for some months now. Are prices going up? Are they not going up? And the inflation report wasn't super extreme, but we are starting to see prices tick up for some of the more kind of tariff-sensitive items, things like furniture and toys, which are very, very much, from overseas.
Yeah, I don't want to delight in the struggles or potential struggles of the U.S. economy, but I do feel like, Stacey, we got to say, this is vindication for you, Stacey Vanek Smith, and for anyone else who's been saying, which is pretty much every economist, that the tariffs were going to lead to this. And we've talked before on this show about how, why isn't it happening? Is it because inventories were pulled forward? Is it because of taco? And, lo and behold, it does appear like it's starting.
Although, a lot of the stuff that had the biggest price increases are not affected by tariffs, like beef. Most of the beef that we eat is domestic. Those prices are up
barbecue
10%.
Season. That's the worst time for beef to go up.
I know, this is exactly. Also, car rental prices ticked up. And Max, you were talking about this yesterday.
Yeah, I'm planning a trip in the Midwest with a heavy road trip component. Going to see some family on my wife's side, my mom, and renting a car. And oh man, it's twice as expensive for this basically week-long rental as I've ever paid, and kind of staggering. One of many things I'd say in the economy that's kind of working against people taking trips and spending as much money on travel as they used to.
Yeah, because there are a lot of versions of this, right? Even if you do have to take the vacation or, you're going to see family or something, you might scale back. Or, you might splurge at this moment thinking things are going to get more expensive. So I thought I would go and see what other people were doing, if they're splurging, if they're cutting back, how they're kind of feeling about the economy right now. So I went down to Union Square here in New York. It's a crossroads of sorts. We've got a lot of tourists, but a lot of locals, a lot of trains come and go from there. And I asked people what their travel plans are. Do you have any plans this summer?
Yes, I will be heading to North Carolina for my mom's birthday.
The economy's kind of in a weird place right now. Is that factoring into your plans at all?
Money does factor in. All the travel I've done recently has been a little bit more local, like a beach day with friends. That's a 2-hour drive away and not a plane ride away.
I travel a little bit for work. I work on film sets. But no, in general, I have no plans to get on a plane for quite some time. And it is because of money.
Do you guys have travel plans this summer?
I don't like to travel during the summer because it's too expensive, too hot, and there are children everywhere. October is the best time to travel.
Do you have any plans to travel this October?
I think I'm going to either go to Croatia or Costa Rica.
A lot of it is if I can get days off. Part of it is, do I find a good deal? Also, where's the dollar strong?
Where's the dollar strong right now?
Japan still seems like a pretty good deal.
Do you track this?
Oh, yeah.
New York is full of some really interesting people. That guy is up to date on the yen to dollar conversion rate. That's amazing.
That went on for a while. It was not just the yen. Apparently, the UK is quite a good deal. The yuan, Taiwan is a good place to go right now, he said. So, yeah, he has a spreadsheet.
I just want to say also, all these winners who are staying in New York in the summer, great move. That's the best thing you can do. This is the greatest city in the world. Why would you travel someplace else?
Possibly because it's a little bit gross in New York right now. It's kind of like walking around inside of a gym bag.
Well, Stacey, point taken.
Yeah.
It may be a little humid. It may feel a little gym bag-esque. But there was somebody in the Bloomberg building this week who happens to agree with me on the issue of summers in New York.
How's this summer shaping up? this summer.
From tourism perspective.
Not the levels we have. I think some of the conversation around tariffs, some of the conversations impacted our tourism, particularly some of our domestic tourists. But we're gonna bounce back. We had a hit during COVID, and we were able to recover after COVID. And this is still a good product. People want to come to New York.
I love it here.
Yes,
and the product being New York.
Look, a little bit of bias there. That's Mayor Eric Adams. Obviously has a vested interest in the product of New York.
That's true. And he's speaking with our colleague Joe Wiesenthal for the upcoming episode of Odd Lots, which is great.
Shout out to Odd Lots.
Shout out to the greats, Odd Lots.
To them if you don't already.
So, yeah, the mayor apparently thinks that all is well in New York, although he did say tourism's
acknowledging some challenges.
Yeah.
I will say, Mayor Adams locked in a very difficult election fight. So... but
yes, he is.
I'm glad that whatever happens, we can call him a friend of the show.
So, Max, there has been a lot of Federal Reserve drama this week, namely Fed Chair Jerome Powell. We've had Trump kind of questioning if Powell should go.
Yeah, it's like an episode of The Apprentice. It's like he's going to fire him 1 minute, then he's going to keep him the next minute, and on and on.
I mean, just to paint a small picture, on Wednesday, we're recording this on Thursday. So yesterday, here at Bloomberg, at about 11 in the morning, there was this headline that read, Trump likely to fire Powell soon, White House official says. And an hour later, there was a headline that said, Trump now says firing Powell unlikely, whipsawing markets.
He's a terrible Fed chair. I was surprised he was appointed. I was surprised, frankly, that Biden put him in and extended him.
So that was a clip of Trump from earlier this week. And, we should say clearly, Max, Trump appointed Powell to his first term in 2017. Powell was nominated to a second term during the Biden presidency. So Biden was in the mix, too. But also, Trump does not technically have the power to fire Powell, right?
Yeah, a lot going on here. And I think the way that this would happen if Powell were to get fired would be around there's this investigation going on into a renovation and alleged overspending by the Fed in renovating its headquarters. Feels really like a pretextual thing, like they're trying to gin something up. But that is how it would happen. And Trump has indicated, later in the day, he said, I wouldn't fire him unless there was some kind of fraud. That seems like a reference to this investigation.
Right. But the sort of the immediate issue I think that Trump is really upset about is interest rates. He wants Jerome Powell to lower interest rates.
Yeah. And, when this original headline happened where a White House official told Bloomberg that they were going to fire Powell quickly, I heard a gasp in the newsroom. I mean, people reacted to that just because it is such a break from precedent. And also, I think everyone knows, because all of us kind of are living with the financial markets, that would affect the markets, that the markets were going to take a dive when that happened.
Oh, yeah. I mean, I think, the independence of the Federal Reserve, the central bank, and the ability for that entity to make decisions that are kind of independent of politics or popularity, at least traditionally, that has been looked at as quite sacrosanct and quite, crucially important. And now I do feel like that is kind of being thrown into question. But we wanted to bring an expert on to talk about this issue, why it's important, why it's being questioned right now. And so we've got economist Martha Gimbel here. She is the executive director of the Budget Lab at Yale. Hey, Martha.
Thank you for having me.
So there's all this back and forth, all this drama about, Trump wanting to potentially fire Jerome Powell. Will you talk to us a little bit just about why? What's going on here on the surface?
So I think one thing to keep in mind is that President Trump likes lower interest rates. In fairness to him, lower interest rates are really fun. You get to borrow money more cheaply that flows through to mortgages and consumer credit.
And businesses expand, they hire. That's good.
Yeah.
Everybody wants that.
The fact that it's fun when interest rates are low is exactly why we have an independent central bank. Because if it were just up to politicians, generally what you see is they try to keep interest rates low because people like that. And then inflation can get out of control. And so historically, policymakers have kind of tied to their own hands and pre-committed to say, hey, we won't be touching the interest rate regime because we basically know that we are not trustworthy. We know that we will do something that in the short run makes voters happy, but in the long run can create economic instability and more inflation.
There seem like two questions here. One is about the independence of the Fed, which is like a big structural question. But then there's also like, should Jerome Powell lower interest rates right now? And it seems like there's room for disagreement there. Stacey and I, Martha, you were not here, but last week, Stacey and I did an episode about consumer sentiment, talking about how there are these warning signs. Is the story that Trump's telling about the economy and like the desire for lower interest rates, apart from the kind of like badness of like the president publicly feuding with the chair of the Federal Reserve, like, is there anything to the argument that like he is being too slow to react, maybe like too concerned about inflation, not concerned enough about the economy?
So I do want to distinguish between the question of like, should the Fed be cutting more versus what President Trump has been talking about, which is like interest rates at 1%. That would be a really, really substantial cut. And no economist is talking about cutting interest rates that much at this particular point in time.
What are interest rates right now?
About 4%. There's all of these things that the Fed is kind of trying to keep an eye on. It's trying to see if the labor market is starting to deteriorate. It's trying to see, what is happening with the impact of tariffs on prices. And it's a really uncertain time. And I think it is legitimately unclear, should the Fed cut rates by 25 basis points this year? Should it hold? Should it do 50? I mean, you could get an economist on here to defend each of those options. You could not get someone on here, I don't think, to defend cutting interest rates by 3 percentage points.
Can I ask, like, people have argued that the Fed should be more responsive to the concerns of normal people. And I do wonder, Martha, like, is there...
Or accountable, too.
Yeah, we've just lived through this period where there's been, like, a massive growth in wealth inequality, where, like, there are aspects of the economy that are not working for a lot of people. It's why Trump keeps getting elected president. And even if you leave aside, like, the mechanism by which this is happening, is there anything to the argument that, like, it would be better if the Fed had less independence than it does today?
No. So I think there's a couple of things to address there. One is, the Federal Reserve has really blunt instruments, and they've talked about this before, right? The Fed is not there to address inequality. That's for a couple of reasons, right? One is they work best when they have really clear mandates. They're there to address unemployment. They are there to address inflation. You start inserting more things into that, it really complicates the picture for them. And it means that people will trust less, right, that they're going to address inflation or unemployment. The second thing is it's a really blunt instrument, interest rates, right? And so, you saw people talking about this with the housing market where, if the Fed raises interest rates, it'll impact the housing market. It's like, yeah, but they need to address inflation, and that's the tool they have. You need Congress, you need fiscal policy to address a lot of these other issues. And I think part of the reason why you've seen this focus on the Fed is because Congress is so dysfunctional. And so people have gone like, oh, well, we can have the Fed do things. But then that undermines the very existence and point of the Fed, which is to be isolated and insulated from a lot of these conversations so that they can do their job.
One argument that I read that I did find kind of compelling was this idea that, like, inflation got really, not quite out of control, but it was almost in the double digits at one point. And I heard, somebody say, like, well, President Biden lost his job, Jerome Powell didn't. And I do think there is an interesting idea. The trade-off of independence is that you're not necessarily held accountable for your actions. And maybe there's just not enough of a consequence if a body is independent. There are definitely advantages, but it does seem like there are real disadvantages. Like, you could make an argument for maybe a less independent Fed.
Yeah, I think one thing that is hard is that consumers don't understand the way the Fed works. And so the thing that people often want in these situations is they want the means that will not achieve the end that they want. So as an example, if you polled voters, one of the number one things that they thought should be done to address inflation was to lower interest rates. Totally understand why people think that, right? Like, things are too expensive.
Yeah, if you're trying to get a home loan,
right.
That's super expensive.
Right. And like, inflation makes things more expensive. If I pay lower interest, that's less expensive. So that will fight inflation, right? Like you see how people get there. But of course, if you lower interest rate, you get exactly the opposite effect. And so I think this is one of the things that is really hard about the Fed. And I understand why it is frustrating, is it does feel like this kind of, group of technocratic bureaucrats just kind of looking at their charts and doing their thing. The problem is that we now have decades of experience that tells us that a group of unelected bureaucrats looking at charts and doing their thing is actually the thing that gets you the best economic outcome. And that is very frustrating. And I'm very happy that I'm the person that doesn't have to sell that concept to voters. But, it's pretty clear from the economic literature that that is, in fact, what you want.
There's a chance, right? Like we wake up tomorrow or even before this podcast comes out and Trump has tried to fire Jerome Powell. What would happen? Like what would our world look like?
So first of all, one, it would take time to get a new person confirmed, and that's even assuming there isn't legal action. First, it would almost certainly be counterproductive, right? Because it's not the case that the Federal Reserve just, is a hand that sets the interest rates in every part of the market. It lends money to banks, for instance, but, the mortgage companies figure out what makes sense for them to set interest rates at. And in a situation where you fire the Fed chair, it is almost certainly the case that people are going to raise interest rates because they are going to feel more uncertain about the U.S. economy and the direction of interest rate policy in the United States. And so, in fact, what you would probably end up with is higher interest rates.
Really?
Yeah, it would actually almost certainly be counterproductive.
Because people would just be so worried about lending money because they're like, what is happening in this country? This doesn't seem like a great time. So I will lend the money, but yikes, you're going to have to pay a lot to borrow.
Yeah, we want some extra money because your risk just went up, basically.
Interesting.
And so, people who have been listening to this conversation who are thinking like, okay, I get that inflation might go up, but I really want to take out a mortgage. So I'm willing to risk it. Like, let's fire Powell and see what happens. It would be highly unlikely that mortgage rates would go down in this instance. The other thing to keep in mind is that we talk about the Federal Reserve Chair a lot. The Federal Reserve Chair does not have unilateral authority to raise or lower interest rates. They are the face of the Fed, but interest rates are set by a committee. And there's a wide range of views on that committee. It is not the case that if even someone was appointed tomorrow who was much more dovish on interest rates than Chair Powell is, that you would see a huge change in interest rate policy. And in fact, you might see the committee going in the other direction because they might feel that in order to maintain their credibility on interest rates and to keep inflation expectations down, that they have to be even slower to cut. So there's a bunch of ways in which this could very, very well be counterproductive.
As an economist looking at this, like the prospect or basically the independence of the Fed being challenged and talked about in this way, how do you feel about this conversation and this issue coming up in this way? Is it like scary? Is it interesting? How do you feel?
I mean, this is the thing that stresses me out the most about the direction of the U.S. economy. I think people should keep in mind when we talk about the stagflation of the 1970s and how hard that was, one of the things that people think played a really big difference there was that Arthur Burns, who was the head of the Fed, was not really independent. It was susceptible to a lot of pressure from President Nixon, and that made the situation worse.
He kept cutting interest rates and inflation got pretty out of control, into the double digits.
Yeah, he was taking calls from Nixon, who was saying, don't do this. You need to, keep money cheap, basically. And so I really do worry that we could end up in a situation like that again. I think you could end up with a real slowdown in economic growth. And again, at the end of this, I don't think that your mortgage or your credit card bill would be cheaper.
Martha Gimbel is an economist and the executive director of the Budget Lab at Yale.
All right, Stacey, as we heard at the top of the show, it's the middle of the summer. It is travel season, and there's some amazing news. In addition to all those plans we heard about earlier.
Amazing news.
Yeah, you don't have to take your shoes off when you go through the TSA line anymore. Donald Trump
Does that count as amazing
has
news?
achieved something
It's a very low bar for amazing. You don't have to take your shoes off. I am a TSA pre-check member. I never have to take off my shoes.
All right, well, for those of us who are not TSA pre-check members, the hoi polloi, you would think this would be great. And, you know, I've often heard people from other countries kind of complaining about our security measures, kind of like sort of snorting at them. And you'd think as we move away from COVID that, you know, the tourist industry might be booming, but it is not, unfortunately.
In the U.S.?
Yeah, in the U.S. So we got the latest data from the U.S. National Tourism and Travel Office, which tracks this, reported that in June, the overseas international travel was actually down 3% from a year ago. And which, okay, it doesn't sound that bad, but when you look at the big picture, we are still a long way from where we were during COVID. And given this, also given the way that the sort of political landscape is affecting travel, you know, of course, people in other countries are maybe not as inclined to go to the U.S. as they were before, I thought it'd be great if we brought in our friend Amanda Mull, Bloomberg Businessweek columnist. She is here. She's written a lot about travel and the decisions consumers make. Amanda, how you doing?
I'm doing great.
So, Amanda, the data that Max just laid out, I feel like you could look at it in a couple ways. One way is like, you know, wow, there have been a lot of rule changes for traveling from other countries. A lot of people might be kind of mad at us right now, and only 3% maybe seems not as big of a change as I might have expected. Or this could mean something else. What do you actually see in these visitor numbers?
This is one of those things where it's a lies, damn lies, and statistics type of thing, because like what matters is like the context you put those numbers in. So like a 3% decline from last year, it doesn't feel apocalyptic for sure. But when you compare that to the pre-pandemic benchmark, and when you look at travel, you sort of have to look at how things were going in 2019 because the pandemic reordered travel plans for so many people in such a durable way. We're still only about at 80% of the international tourist arrivals that we were at in 2019. So overall, like this is a market that has already shrunk, and for it to continue to decline is bad. It means a lot of bad things for U.S. tourism jobs. It means bad things for New York City, where we all are. And when you start breaking those numbers down further, you see some like worrying indicators. The current projections are that tourist arrivals for the U.S. are going to be down overall in 2025, up to 9%. So when you stack that on top of the existing decline post-pandemic, it's an industry that's taken a huge hit.
You know, it's interesting because you think about people coming to the U.S., in a lot of ways it says more about the economies of other countries than about our economy. Although I guess, you know, the cost of the dollar or whatever does affect it. On the other hand, when you start digging into these numbers, you see some signs that like the Trump factor may be playing a role. Canada, so in the June numbers that I just gave you, we don't have the information for land crossings or for Canadian and Mexican travel. But when you go back and look at the data we do have, which is as recently as April, it's down like 20%. So way more down.
Yes.
Yeah, and Amanda's talking about these kind of like small communities. So you have the hotels, you have airlines, you have these big industries that are kind of hurt across the board. But then there are a lot of towns in Maine and also upstate New York where you get a lot of Canadian tourism. Also Florida, for some reason. I guess Canadians love to go to Florida. The other thing is, it's probably worth mentioning, and you see this in some of the analysis of this data, is that it's kind of too early to know for sure where the international tourism's going because people plan vacations like way in advance.
Yes, that's
like,
true.
I have a trip to Italy planned for next year that I don't know, honestly, if I would have booked if I were booking it now, partly because the dollar's gotten weaker and some other stuff. And so this may be a case where just like the tariff data that we talked about at the top of the show, where like we didn't see it at first, you could see it down the road as people are planning vacations in the future.
Yes, especially with tourist arrivals, you get this sort of lagging indicator thing that makes the numbers really frustrating for people to look at and understand. Even smart people who understand how this works and understand that sometimes effects take a while to show up in data have a really hard time looking at numbers 3 months or 6 months after an event that was supposed to change everything and thinking, it still looks normal. Was this wrong? And because of the lag between when you plan and book a vacation for pleasure travel. And when you actually go, I think that we will be seeing fallout from this for quite a while.
Okay, I have a question for the both of you. So we're talking about the sort of post-COVID recovery. I want to get into that. But I was curious to ask you, how long do you think it took for travel to recover after 9/11? Amanda, what do you think?
I used to know this number. This number came up in some reporting I did for a story a couple of years ago. And I think it was pretty short from my memory. I think it was like a couple of years, maybe less.
Stacey?
I know our economy took like 10 years to recover. So I'm going to guess, even though Amanda knows all these things off the top of her head, I'm going to guess a little bit longer, like maybe 7 years.
Okay, so it was kind of in the middle. July 2005 is when we hit the numbers we'd hit in August 2001. So basically 4 years, which is kind of interesting because that's less time than it's taken us to recover from COVID. And it sort of made me wonder, because on one hand, you would think like 9/11, and especially for people who were adults at that point, right, just such a defining moment in history and culture and everything. And it was one where like air travel in particular was implicated, international travel. There were all these stories written about, oh, the world will never be the same. And yet, you know, we kind of returned to sort of the pre-9/11 travel norms pretty quickly. And it's taken us longer now. Like we are further out from COVID than we were from 9/11, which seems interesting and different. And I'm not sure I would have necessarily intuited that.
Yeah. I think behaviorally, the sort of durable nature of COVID habit changes, people really took a break from flying for like a year or more. I think that that is like a big enough interruption to people's habits that like you're going to end up with more durable changes, even at the margins. Some people who just like don't want to fly anymore because they got out of the habit. And then you also have changes in business travel. And business travel has never gotten quite back up to the rates it was before.
That was very lucrative too, because they didn't really look at prices as much as the rest of us.
Yes, they don't look at prices and they fly all the time.
Yeah, and not all of this is about fear or about, hey, we don't live in a globalized world. It's about people getting on Zoom calls for some percentage of meetings that they would have flown for. There is an underappreciated factor, which is related to this, that Amanda has written a lot about, which is that flying sucks now.
It's so bad.
Is it worse than it was? Like, is it worse than it was before the pandemic?
It depends who you are and how much you're paying to fly. If you are a person who post-pandemic has decided to treat yourself and get a fancy credit card that gives you rewards miles and puts you in line for upgrades and maybe incentivizes you to buy more expensive plane tickets to accrue those rewards faster, then flying for you might be better now. You might spend more time in the airport lounges. A bunch of them have opened up since the pandemic. You might be sitting in nicer seats. For most people, I think it is worse. I think that travel has gotten a little bit more like riding the bus for a lot of people. For most people, for everybody in the back of the plane, I think that temperatures run a little bit hotter as far as people's behavior. I think that there was like this real spate of like post-pandemic, like sort of antisociality that I think has maintained its momentum in some cases in airplanes.
One thing that I keep thinking of just like sort of more holistically about international travel going down is I was on an earnings call once for the Empire State Building, like the people that own the Empire State Building, and they were saying that travel was way down since the pandemic. And their solution, they're like, oh, but we've made up for the revenue by raising ticket prices. So it's like $80, $100 now to
Same
get
dynamic,
a ticket.
I think.
Right. So I'm wondering if we see less travel, is that going to push prices up? Is that going to be contributing to inflation?
I think so. But it depends on what kind of travel destination or what kind of travel expense you're looking at. If nobody is buying airline tickets for pleasure travel, if nobody is renting cars to go on a fun road trip, then those will probably get less expensive to incentivize more people to start taking those up. That's what we saw during parts of the pandemic, which is, come take the flight, go on the vacation. We'll get you there cheap. What it costs when you get there is none of our business. But these sort of attraction tickets that are sort of limited, that like once you're there, you don't want to skip it because it costs $20 more than you thought it might. Those types of things, I think, are sort of ripe for inflation, ripe for price increases to make up for volume decreases.
This is why the shoe thing is such a big deal, because Amanda's talking about how, airline travel has become bad and everything, but maybe
you do get kind of harassed. Like
maybe the shoe thing will save it.
You think that'll is a move in the right direction?
Yeah.
I mean, I'm happy to keep my shoes on.
Same.
So, Max, we are now to the part of our show where we talk about a story that is underrated in the news, something that is very significant but isn't being talked about enough. And you brought today's story.
Yeah, and I'm glad Amanda's here to stick around because we definitely need an expert in consumer behavior to explain this one. So, all right, Wall Street Journal reported on July 15th about a new trend in online commerce. I'm going to read you the headline. Etsy witches charge for jobs, sunshine, and Knicks wins. Business is booming. So this is a story about how witchcraft and other sort of magical spells are super hot on Etsy. And I can tell you, I went on Etsy and there are just like, it seems like thousands of magical spells for sale.
What does this mean? Like, what do you do? How do you buy a spell?
You pay a witch, an online witch or warlock, I suppose, or other spiritual figure, like $20, $10, as little as like a couple of bucks, depending on the spell. I guess it depends on what you want exactly. And I think that from there, they collect the money. But of course, they
cast a spell on your behalf?
They cast a spell on your behalf, yes. Now, what's funny here is this is like technically banned by Etsy. They ban metaphysical services.
What an incredible category name, first of all. Metaphysical services.
Why did they ban metaphysical services?
I have no idea, but I did notice that like all of these witches have disclaimers, essentially saying like...
Also, do you want to mess with the witches and say that they can't sell their spells? Because that does not seem like a good move.
I mean, if the witches have cursed Etsy, that would explain some things about their
Maybe we should short Etsy. They've messed with the witches.
Amanda, do you know why people are doing this? It can't be totally fake. Like, you look at the reviews. These sellers have thousands of reviews. Obviously, there are ways to juice your numbers and everything.
Are you a believer?
Yeah.
But it looks like there are people who are going for it. And there are some hilarious anecdotes in this Wall Street Journal story. The guy who paid to have the Knicks win, they won one game, but then they lost the next game, and he said that it was probably some Pacers fans doing some counter spells,
right,
you know?
Right.
Absolutely.
Yeah, you can't account for counter spells when you're paying the Etsy witch is the thing. They may have contracted with a better Etsy witch.
Well, initially I was thinking like, Stacey, you and I, because there are some spells that are relevant to everybody's business.
Yes, what?
There are lots of spells.
Stock market go up?
Well, there's some wealth spells. There are also revenge spells, which are fun and seems dangerous.
Yeah, you can have like an Etsy witch like hex your friend's ex-boyfriend who cheated on her or something like that. That's fun.
I feel like if Etsy's going to crack down on anything, that's where they should start. But then there are also these kind of general ones. Like, here's a good one, $270, kind of pricey, but call to all 72 demons of the Gotia for a custom spell. So 72 demons, all, and according to the description, they're all going to work at once together.
Demons? That feels dangerous. No.
I've seen too many horror movies. Don't mess with the demons.
Didn't you ever
don't
watch
want to talk to them.
Buffy the Vampire Slayer?
Yeah, well, I had the same feeling because, like, you know, my kids are, you know, there are a lot of fairy tales and myths.
Harry Potter.
And there is a recurring theme, which is that don't mess with magical spells. You mess with a magical spell, like, it's gonna blow back in a way you cannot appreciate. We cannot predict the nature of witchcraft, and as a result, I'm staying away.
I am about to reveal myself as too online, but this is a very long-standing digital market. This goes back, at least in the sort of current iteration, to Tumblr, as so many weird things online do. Tumblr witches that you could ask for a spell, or you could like PayPal them or Venmo them for a spell, have been going for a while, and I suspect a lot of these witch entrepreneurs have just moved their services over to Etsy to, you know, it gives you a checkout layer, some seller protections.
I do also feel like there's this moment happening, like kind of like a mystical moment. I just feel like astrology, witchcraft, like this stuff is kind of coming to the fore.
Yes, it has definitely grown over time.
I mean, witchcraft's been around for a minute.
Yes, witchcraft is one of our oldest sciences.
Women owned often.
Yes,
one of the oldest women owned businesses.
Yes, you know, the witch girl bosses of Etsy are simply
they've been leaning in for centuries.
Yes.
All right, Amanda, thank you for being here.
Thank you so much for having
Amanda.
me.
All right, if you are a witch on Etsy.
Witches of Etsy.
And you have a suggestion for us or any thoughts on this story, please email us at everybody's@bloomberg.net. That's everybody's with an S at bloomberg.net. Also, regular people can email us too.
Muggles also welcome to email us.
You're genuinely curious to hear from listeners about travel and like how this story is playing out in their lives. I also want to say, Stacey, we still need reviews. We love reviews. We got another 5-star review, and I am not going to read a haiku for this listener only because they offered a bit of constructive feedback in the review.
Really?
Taking slight issue with the haiku.
So in honor of the review, we will not read a haiku. I feel like that's a reasonable way to honor this listener. Thank you for the review.
GA Seattle, we're not promising to not do haikus in the future, but today, for you, we will assent.
We will hold off. I think that's classy
and let's
of us.
see how it goes from there.
This show is produced by Stacey Wong. Magnus Henriksen is our supervising producer. Amy Keene is our editor, and Brendan Francis Newnham is our executive producer. We get engineering support from Blake Maples and Dave Purcell fact checks. Sage Bauman heads Bloomberg Podcast, and a very special thanks to Jeff Muskus, Julia Rubin, and Maria Ling. Thank you very much for listening, and we will see you next week.